Welcome to Ivanoff Retirement Insights with Paul and Travis Ivanoff. The father and son team at Ivanoff Advisors and Ivanoff Wealth Management helps clients grow and protect their wealth. Paul and Travis understand the importance of having tax-advantaged, reliable income in retirement, protecting your assets, and helping you achieve your retirement dreams. Now, Ivanoff Retirement Insights.
Yes, and you are in for more information to help clear up the confusing concept that is retirement. Make sure you are subscribed to Ivanoff Retirement Insights and get information on Travis Ivanoff and Paul Ivanoff online at ivanoffinsights.com. How many times can I say Ivanoff in 1 minute, guys? How are you both doing today?
Oh, we're doing fine.
Yeah, I'm doing great. How you doing, Allie?
I'm doing very well. Thank you guys so much for being here. There's just so many little pieces that go into a retirement plan. I know you guys know that. You've been doing this for years. Today, I want to dive into tax-deferred versus non-deferred. And you cannot break this down too simply, Travis. What do we need to know?
So tax-deferred versus non-tax-deferred, and there's other ways to say that. But essentially, when we think tax-deferred, you're thinking of anything you haven't paid taxes yet and is growing tax deferred, meaning eventually you'll have to pay taxes on it. So when you think of that, you think of traditional IRAs, you think of 401k, 457, 403bs. There's a few other ones, I'm sure, but those are vehicles that you can usually take a tax deduction on for investing in them, knowing that eventually you're going to pay taxes once you have to pull it out or when you hit your required minimal distribution age. So sometimes we kind of tell clients, you're not going to pay on the seed, but you will pay on the harvest.
That makes perfect sense. Well, and I know with retirement, there seem to be advantages and disadvantages to every piece of it. So let's get into those. What are the advantages and disadvantages of investing tax-deferred or non-deferred?
So the advantages of tax-deferred is, again, you can usually take a tax deduction on this, will help lower your taxes, as well as since they're not paying the taxes on it up front, there's more money there to grow tax deferred, so it might be compounding or making more interest on more dollars because you don't have to pay taxes on it. So those are two of the main advantages: is the tax write-off as well as more money there growing for you tax deferred.
And obviously, a lot of people assume that taxes are going to go up in the future. So how can we kind of go ahead and get a tax strategy in place when it comes to our retirement accounts? When you're sitting down with someone, do you try to get those tax deferred accounts over to the non-deferred side or vice versa?
That's a great question. Sometimes we will explore a lot of 401ks and whatnot at new employers or current employers are starting to offer a Roth or after-tax option, which is the opposite. That means you're going to pay on the seed. You will not have any tax deductions on it, but the harvest will be tax-free. So that's something that we do talk to our clients about. But most importantly, we bring in an accountant or their personal accountant to make sure it makes sense for them, depending on a number of factors. Do they need the write-off? Does it make more sense to go tax, free? I personally, in my own planning, use a lot of tax-free. I'd rather pay on the seed and not on the harvest, especially when taxes, for the most part, go up. They're not often going down. So it's something that we do look at Roth conversions or just even contributing to a Roth when it makes sense.
So I know we're kind of in the weeds when it comes to these different accounts that are tax-deferred or non-deferred. If we could zoom out 30,000 feet, if some people are going into retirement and they're thinking, look, I'm just going to let taxes fall where they may. I have my retirement accounts. I have saved through my 401k. I'm just going to see what happens. Could you give someone perspective on the biggest difference that a tax strategy could do for them?
One of the things is that when they're ready to retire, even prior to retirement, we'll find out what tax bracket they're in. And if they're not at that upper end of it, there's an opportunity there to start doing a Roth conversion, and then we'll fill up that bracket to the height.
So, Travis, with tax planning, I know a lot goes into it. Can you kind of break down how this has helped someone that's walked through the doors of Ivanoff Wealth Management, how you personally have helped someone put their strategy together?
Absolutely. I have a great example where we had a client, we've been working on Roth conversions. Now they're approaching 70, and they ended up finding their dream home in Tennessee, actually, and they needed to sell their current home, but the homes aren't flying off the market, but they really needed to do this quickly and come up with a down payment so they didn't lose their dream home in Tennessee. Well, I had to remind them that, hey, we've been doing Roth conversions. You have over $500,000 completely tax-free because of the Roth conversions we did. So they had to ask again, so Travis, does that mean we don't have to pay taxes on that money? I said, that's correct. That's why we've been doing this tax-free conversion. Now you have this huge tax-free honeypot, so that $500,000 can be pulled out without having to pay any taxes on it. So that's exactly what we did. The client was able to take the money out and put a huge down payment on their home. Now they're happy. They have their home in Tennessee. They're currently selling their other home. And that's where, we don't think about what comes up in the future, but that's a perfect example is they didn't know they're going to move to Tennessee. They love California, but it turns out that there was a better opportunity to be closer to family. And that's where that tax-free, I always refer to as like that tax-free honeypot to our clients. And hey, it's better to have something that you have to pay no taxes on versus everything being taxable, because if they didn't have that, they do have other retirement dollars that are tax deferred, where if they would have pulled that same amount of money, it would have put them in a very high tax bracket. So that's a great example of how Roth conversions can come into play way down the future for something you don't even know you're going to want. So that's a good idea to have that. And then furthermore, another example with the same client is once we did all of their planning, well, now every day's Saturday, but they don't spend as much money as they thought. So they're still pulling money from their IRAs. And what we're doing is we're putting it into a non-tax deferred, a brokerage account for them where they're paying the taxes now. And then we're just reinvesting it. And now they're building up another account that's going to be taxed at capital gains rates versus ordinary income, which could be more beneficial down the line for them. So as you can tell, there's a lot of in and outs in this planning. And that's why, we do this all day and we bring in our accountants all day. But it's always a good idea to have something tax-free for you. So if an emergency comes or your dream home comes, or if you need to help the kids, you have a bucket of money that is going to be tax-free for you and not impact you on your income.
Yeah, one of the sayings that we bring up quite a bit is that it's better to have it and not need it than need it and not have it, where you have to be hit with the taxes.
Yeah, that is a powerful, powerful client story there, Travis. I mean, who knew a Roth conversion could end up leading someone to their dream home? And of course, we know everyone's situation is very different, but it just seems if you're proactive when it comes to your retirement planning, a lot of dominoes can fall in your favor. So I appreciate you breaking that down. This is just one of the many, many concepts of retirement that we are going to get into on the Ivanoff Retirement Insights podcast. Before I close out, guys, is there anything left about taxes we need to cover?
No, I think it's important to have a good accountant. And if you do not have one, we have a few options here at Ivanoff Wealth Management that our accountants would happy to walk you through all these strategies. And we'll be there with you on the call to make sure it all makes sense and tell you how that works in the financial planning aspect as well.
Great. Well, just like you said, Travis, there are a lot of ins and outs to be up to date on. And if you want to be up to date on everything retirement related, jump online at ivanoffinsights.com and you can reach out to the team there as well. And as always, thank you for listening. We'll catch you next time. Have a great day.
Investment advisory services offered through Ivanoff Wealth Management, a registered investment advisor firm. Registration is not an endorsement by security regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Travis Ivanoff, California CRD number 325275. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Ivanoff Wealth Management Incorporated. Read your contract for restrictions, limitations, or penalties. Ivanoff Wealth Management is not licensed in all 50 states. To find out if Ivanoff Wealth Management is licensed in your state, please call 714-553-1490. Ivanoff Advisors is not affiliated with Ivanoff Wealth Management Incorporated. Advisory services are offered by Travis Ivanoff through Ivanoff Wealth Management. Insurance services are offered by Paul Ivanoff through Ivanoff Advisors. The aforementioned are unaffiliated companies.